We get that. Let's focus on the auto ancillary stocks. Anmol Jain, the MD at Lumax Auto Tech, joins us now. After reporting a strong set of the third quarter numbers, we discuss obviously the company's commitment to its vision for FY31. We have the second consecutive quarter of record sales that the company has reported, whether that sustains or not, and the FY26 growth outlook, which the company had earlier told us here at 25%, which has been increased to 30% itself. Anmol, thank you so much for joining in. I mean, you've revised your guidance upwards. You have a 20%, you had that 20% sort of margin target as well, and you are confident on, growth prospects going forward. What we want to understand is, one, what drives this? Secondly, what's your outlook on inorganic growth as well? Because the last time we spoke, you did say that you are evaluating a bunch of opportunities. Maybe unlikely that anything closes in FY26, but we're towards the end of FY26 now.
Well, thank you, Nigel and Mangalam, for having me always. I think Lumax Auto Technologies continues to deliver a strong performance quarter on quarter. I think the guidance upwards is just completely an offshoot of, we've seen a significant uptick in demand post the GST rationalization across different segments of the industry. So I think it's very, usual to say that we are looking a better quarter four, and then for the full year, as I said, 30% demand. 30% growth in demand. In terms of outlook, I can only say that, well, I think there are 2-3 things which Lumax Auto Technologies is doing differently. Number one, if you see our order book, almost 70% of the order book sits with the product lines which are in the premium space, which have a higher margin than what the consolidated margin is being reported currently. So we are quite optimistic, quite bullish with the premium offerings, with an integrated basket of solutions which we can offer to our OEMs. We will be looking to maintain a higher growth compared to the industry growth going forward as well. And again, based on the order book, the margin should also start pulling up in the subsequent quarters in the next financial year as well. Specifically on inorganic growth, as I mentioned, the company continues to evaluate multiple options. But again, I don't foresee anything to happen in FY26. But again, maybe in FY27, FY28, who knows? But we will definitely keep looking out for strategic fit to the inorganic growth path.
All right. Hi, Anmol. Good to see you, Ben. As always, been a big value creator, and your shareholders will be quite excited, particularly with regard to the path ahead. You're currently doing margins of around 16%. You're talking about a 20% number in the next few years. What are the factors you're considering? Which subsidiaries do you believe will lead this kind of margin expansion from here on? Give us some colors, maybe top 3-4 points that you're looking at with regard to this margin expansion, point number one. And organically, you're guiding for a 15% growth for a company that's grown beautifully in the last few years. Are you being a little too conservative with that 15% number of organic revenue growth?
Thanks. So on the margins, I think the company has attained now a 15% EBITDA margin. We are pretty confident to maintain that and progressively grow that margin, in the subsequent quarters. The confidence comes, again, Nigel, basically, as I mentioned before, the order book, which is almost close to 1,500 crores, 70% of that order book is largely coming out of 3 of our business verticals, the advanced plastics, the mechatronics, as well as the alternate fuel systems. Each of these domains is typically operating at a much higher EBITDA margin than the consolidated numbers which we report. On top of that, the aftermarket, which also has a higher EBITDA margin, will continue to not just aid the EBITDA margin expansion, but also fuel the growth. So I think that's the reason why we are pretty optimistic in terms of the EBITDA margin expansion going forward. I'm not sure when it will achieve 20%, but the endeavor is to try and come as close to a 20%, maybe a 17%, 18%, something like that over the next 2 years.
All right. So, the order book that we have right now, mechatronics is about 345 crores and advanced plastics is around 745 odd crores. If you could give us a sense on, say, the next couple of years, how does this order book translate into overall revenue? What does the revenue contribution of the company look like, so to say, in the next 2 to 3 years?
So I think from a product standpoint, almost half of our revenue mix comes from the advanced plastics today. And I think that will continue to grow. Advanced plastics, again, largely Mahindra is our largest customer. Advanced plastic is almost 70% dependent on Mahindra and Mahindra. With their bullish plans, I think the advanced plastics perhaps would even go to a 60% mark. Apart from that, the mechatronics is one of the fastest growing business verticals for the company. We have already got a very strong order book lined up. And again, we are continuously engaged in terms of expanding this going forward. As I mentioned last time, there are new products like a body control module, which we will be getting into SOP perhaps in FY27, which will also significantly pull up the revenue growth and the margin. So those are the two main verticals. Apart from that, yes, the alternate fuel systems, the green fuel, which is into the CNG systems, that is something which, again, it has been a very recent addition to the group. And I think it has very, very strong prospects. We recently were the first one in India to localize one of the ferruless fitting and tube for one of our OEMs. And again, that product line itself has the opportunity to perhaps grow almost as big as the top line of the entire company over the next 3 to 5 years. So we're quite bullish on these three verticals.
All right, Anmol, thank you so much for joining in. A longer conversation due post, the next quarter's numbers, and also get you up to speed with, maybe whether that FY31 vision turns into FY30 or not. Thank you for joining in. Good numbers coming in, good outlook as well. The stock up around 1.5%. We take